and gentlemen, we are live. We had a few technical difficulties. Apparently, Zoom was hating yet again, but we're here and we're ready.
I'm so excited. I'm so excited to be here with you guys.
I am super duper excited. I'm super duper stoked just to see, okay, so let's allow everybody to get in. But first off, Teri, how was your day today? Like, what was going on?
What was going on with me? What did I do? I feel like I did a whole bunch. I traded a little bit. I talked to my students just a few minutes ago. We were talking about risk management.
Okay.
I have some friends in town, so I took them to go see this really cool Laguna and some real estate that I'm trying to convince them to buy. Block. So I'm like, okay, y'all buy some. I'm gonna buy 3, and then we're gonna just be all up in here. What else did I do?
There goes the neighborhood.
Oh, they're all talking about like you can't be an investor in these parts of the in the neighborhood. I'm like, please, we're about to rent out all these.
Yes.
Well, Jolene, how was your day?
Today was actually pretty chill in comparison to Monday, but we'll talk about it.
Okay.
We'll talk about it.
How are you doing today, everybody? Like, today is Tuesday, September 15th. Today, some of us may have geeked out a little bit.
Oh, is that what you did, Mark? You trying to tell us you geeked out? Is that what you said?
I definitely, had to geek out, as a, technology enthusiast. Definitely had to watch a few things today.
I was a witness to this geeking out.
Oh, yes.
With this.
I mean, maybe not that one today, but maybe this or, this.
Yeah.
But, I'm excited for that one. Word on my street says October 6th,
Wait, that'll be wonderful.
Here's some things. But I'm pretty excited. I'm sure we're going to talk about some of those things today. But hello, everybody. I am Mark Monroe, accompanied with the wonderful Jolene GC. And we're going to tell you about a lot more about our guest today because, she's phenomenal. What else can we say? But if you haven't subscribed yet, I don't know what you're doing. But, obviously you're still enjoying some of the wonderful content that we produce. So that's awesome. And if it's helping you in your journey, fantastic. But please subscribe, become a part of the family, become a part of the squad. We love to have you. And if you like what we do, go ahead and hit the like button. But if you think that we can definitely do better, go ahead and hit the dislike button, but please tell us why. And of course, if you want to be in the know, go ahead and hit the bell. But now that we got some of those formalities out of the way, today is Trade Talk Tuesday, y'all. And I am super duper excited. There's been a lot going on. We had I guess we're still in the midst of it. We still have some quadruple witching that's taking place, that whole thing. And it's not just about Halloween. Let's see. Oh my gosh, we got product announcements that took place today.
Mm-hmm.
We got, lawsuits in the process. So there's a whole lot of going on. Like there's a lot of drama that's happening in the streets. And today we're definitely going to see if we can break down some of this in a technical format. And then on top of that, maybe in some fundamentals. But without further ado, I'm going to stop talking. Thank you for each and every single one of you and joining us in today. And we have a jam-packed show. So I'm going to toss it over to the wonderful Jolene GC. So that way we can get this party started. Go ahead, Jolene.
Hey, y'all, what is up? Trade Talk Tuesday. I'm excited. Okay, we're going to get into our guests. I know y'all know we're going to get into it, but we need proper foundation to be laid, okay? So let's see. What happened today in the Dow, or the market overall, basically? So the Dow was up. Everything was green. We got the Dow up by 2.27 points, S&P 500 up by 7.66 points, and the Nasdaq was in the lead today with 133.67 points. Now for sector performance, okay, technology was not in the mix today. Let's see, top we had communication services, real estate, followed by consumer discretionary. And then for our bottom feeders, we had consumer staples, energy, and financials. Okay, so you all know that we updated our stock pick list So for pick performance, we got Tesla coming in number 1, followed by Square. And then we had a 52-week high for Taiwan Semiconductor. And you already know who is with TSWM, okay? You know my bae, SMH, boom. Okay, then for the bottom 3, we got Best Buy, Twilio, and XLI, which is one of the latest additions to our list, and that is industrial. So be on the lookout for the performance of that. The chart actually was looking pretty good. So that is why it made it, well, one of the reasons why it made it to the list. All right, now, let me tell you all who your super chat dollars are. And shout out to everyone who's already contributed, knowing that we got a good one, knowing already that we got a good org. Okay, so this week's super chat dollars goes to Black Mental Health Alliance. You can find them at blackmentalhealth.com. And BMHA is a private nonprofit organization which provides training, consultation, support groups, resource referral, public information, and educational resources regarding mental health and mental illness issues. Their mission has remained true to the original purpose. So many nonprofits get off track. Once dollars come in, they get off track, but this one has stayed true to the purpose, okay? To develop, promote, and sponsor trusted, culturally relevant, key word, culturally relevant educational forums, trainings, and referral services that support the health and well-being of Black people and other vulnerable community. So that is where your super chat dollars are going to today. And given what we're going to be talking about, Miss, I don't even want to say her name yet because I gotta do the introduction.
Yeah, I feel like the cat's out of the bag because clearly her name.
No. I got a flyer introduction. I got a flyer introduction. Okay, this comes from the words of Teri herself. But hold up. So you know that the episode today is called "We Came, We Saw, and We Rolled." But let me tell you about what happens when you come for our guest. Let me just read it, okay? Here's the background. First of all, somebody was talking out the side of their neck, trying to come for our guest. And our guest quickly gathered the receipts and let them know what the deal was. So let me just read this to you, okay? Let me get ready, y'all. First of all, this is how I imagine she said it. First of all, all my life, I've been in the top percent. So why would this be any different? I graduated 3rd in my high school class of over 600 students, AKA top 1%. I went to MIT, where only 7% get in, and graduated with a 4.5 GPA on top of that. I was the #1 course creator in Teachable's 2019 Creator Challenge out of over 4,000 courses. That translates to top 0.25%. There are so many more stats that I want to rattle off. She was raised by a single mom, a dad who went to prison, born premature. All of these odds were stacked against her. But still, she is here. Black, female, millionaire, AKA top 2%. And there should be no question that she would find a way to be in the top 5% of traders and teach her students how to get there. You tell our guest what she can't do, and she's going to tell you what God can do. Ladies and gentlemen, in her own words, with a little bit of Jolene GC sauce and flavor, let's give it up for Teri Ijeoma. Welcome. You know, I had to take the long route. Thank you for being here.
I wish I had lighters right now, but I'm afraid of like any fire. So I'm like, yo, this is already hot.
I love that introduction, Jolene, and especially the air check. You were like Black.
Just to give you that emphasis.
I love it.
Welcome. Oh my gosh. First of all, just thank you for being here. You already know what it means to me to have another woman on the show. So, you know.
Thank you.
Thank you, sis. I appreciate your presence here. Let's get into, for those who don't know, who have been under a rock somewhere, let's talk about your investor journey. And then, as always, we will take a little sneak peek, maybe some into your lunchbox, whatever stocks picks you want to share. We can look at some charts too.
Sure. So I first learned about investing in high school, actually. It was my junior year going to senior year, and I was in a program called LEAD. So they took us up to Northwestern University and we got to check out Kellogg's Business School.
Mm.
And one of the places they took us was the Chicago Stock Exchange, or the Chicago Mercantile Exchange, but I just say Chicago Stock Exchange. And when I got there, I was just, my eyes were opened up to this whole new world. And my senior year of high school was when Google had their IPO. So I remember coming home and I was just like, oh my God, Granny, we gotta go. We gotta get this. It's $83. Can y'all believe Google used to be $83? Anybody wishes they would have bought it at $83. And I remember telling my grandmother, like, Granny, we got to do this. But y'all, we didn't know what to do. And I asked all my teachers, I asked everybody around me, but nobody knew what to do to buy a stock of Google. Plus, we didn't have that much money. So my granny was like, I don't know where she thinks she got to get this money from, because we ain't got it. But even if we did have it, we didn't know where to start. So went to MIT and said, you know what, I'm going to figure this thing out. At the time, they had the #2 business school. So I said, okay, I'm going to go there. And at MIT, I interned at Morgan Stanley. So that was my second introduction to stocks. But while I was there, I was like, y'all, this is for the birds. I don't want to be in this building 24 hours a day, just grunt work and not having a life. So I'm going to go be a consultant so I could fly around. At least we'll work hard, but I get to fly. I see I already had that travel bug from trade and travel, but went into consulting, and one of our clients was Teach for America. And that kind of completely turned my world around. So for 10 years, I went into the education field. I worked on the admin side of Teach for America, so helping train teachers. I actually worked for a ministry, a nonprofit. I worked for, my last job was assistant principal of an elementary school. So I did this whole education route, but I would trade on the side. And it was like my side hustle to bring in income on the side. And finally decided, y'all, I'm leaving this school. These bosses are crazy. So I quit my job and started trading full time about 2 years ago. Well, actually 3 now, 2017, and started traveling all over the world. I was in South Korea for a month, Thailand for a month, Vietnam for a month. And while I was gone, people started asking me to teach them how to trade. So long story short, now I have a course called Trade and Travel, teach people how to trade, but more so I just trade so that I never have to have a boss again. And that's my story. That's who I
am. Thank you so much, girl. That was good. Okay, so we want, Mark, calm down. Before we get into Mark be so lit. Before we get into your
those that don't know, this is like episode 2.
What? Friends, we had like this whole live and people loved it. So yeah, that's my friend. And Jolyn too.
I love it. Gang, gang. Okay, so one of the things I wanted to know was, well, some of the lessons that you've had. We particularly like the lessons that are like hard to take at first, but then really stick with you over the rest of your trading career. So could you share about a time that was your reality?
Yeah, actually, a lot of my students are probably jumping on, and we just had this whole risk management talk. And I talked to them about, in the curriculum, I talked to them about my biggest loss. And it was right when I had first started trading. I was in Thailand, and in Thailand, they do this beautiful ceremony where you light lanterns and you let the lanterns go. Have you done that, Mark?
I've heard.
It's so beautiful.
There's a man in Gotham that may have experienced these things.
Oh, Lord.
See, okay, anyway, back to Thailand. I'm just playing. So we were in Thailand and doing this beautiful ceremony. Afterwards, though, because the time changed, the timing is different. So I had like all day in Thailand to do this beautiful thing. And then at night, I went to check my stocks. And the market opened, and I had just lost, for me at the time, this was a ton of money. Now it's much different. But for me at the time, I had just lost $26,000. And it was literally in one day, overnight. And I was just, I didn't know what to do. I called my mom. I'm bawling on the phone. The stock at this time too, the stock is still dropping. So I'm just like, I'm quitting. I'm gonna have to, and like y'all know the biggest fear for me is when this happened, I was losing most of my money. So I'm like, I gotta go get a job again. I can't believe this.
Mhm.
And one of the things my mom said to me is she's like, Teri, if you quit right now, how are you gonna get your money back? And I said, well, damn, like you're not supposed to say that. You're supposed to say, give it all up, throw it in, throw it in the towel.
Light it
Throw it
on
away.
fire.
Go. And or you know what I really thought she was gonna say? I thought she was gonna say, I told you so. And
Mm.
I'm so thankful in that moment that she did not use her mom card and she did not tell me I told you so. Because that would have completely crushed my spirits. And in that moment, like I had to try to pick myself up and it wasn't easy. Like I had to then work back over all the mistakes I had done. And like some of the mistakes I had done to get there is one, I picked the wrong company. Like it's really important to pick the right stocks. And I had picked one that I thought was going to be amazing, but in the grand scheme of things, like it was Pandora at the time, like the music streaming Pandora.
Oh
I
wow.
was like, oh, it's gonna be in every car, it's gonna be in every TV. Y'all, YouTube, Apple Music, Spotify. It was one of the worst players that I could have done, but in my head, I had this loyalty when I should have been thinking about what's the best stock for the market, right? Like what's the best in breed in this category? Is Pandora really the best for music? No, not at all. Like, another mistake, I got in at the highs. I had got in thinking that, oh man, like I'm gonna ride this, and on top of that, it was right before earnings. So I
Oh
did the
man.
and for me, earnings is like gambling because you don't know what's gonna happen after earnings. And
50.
so in my head, I'm thinking, oh yeah, tomorrow I'm gonna be rich. It's gonna go up $3-4. Y'all, it went down $3-4. Another mistake, my quantity was way too big. I had like 8,000 shares. So even if $1 down, I'm down $8,000. And I know I'm not the only one here. Like y'all, I'm a teacher at heart. So y'all put in the chat if you make any of these mistakes, because sometimes you think like, oh, this is it. Like I'm gonna be rich tomorrow. You buy all these shares and then it goes wrong, and you're like, I gotta go work again. Like, like it's just
Don't want that.
so those are some of the big mistakes that I made in the past, and now I have safeguards to keep me from. Mm-hmm.
Okay. Well, Mark, I know you want to talk about Lunchbox.
Okay. Let's talk about lunchboxes. So,
Emoji?
Terry, let's talk about your lunchbox a little bit, shall we?
Okay.
What you been trading this year?
Ooh. Some of the stocks that I really liked are I like Zoom a lot. I like Teladoc at one point. Now I've been trading Adobe and Salesforce. Those have done really well. A couple that people don't talk about a lot. I actually like AutoZone. It's one of my favorite stocks.
AZ,
I
right?
also, huh?
AZ?
AZO.
Yep.
AZO. Like I've been trading it for a long time. And so now it's like 3 times more than it used to be. So I love AutoZone.
Is
They have,
AutoZone Bay? Is like, let us know. Like,
I'm saying, like, yes, like honestly,
Okay.
if you have a portfolio that is heavy tech, AutoZone is a very nice complement
yep.
because oftentimes when tech is falling, AutoZone is going up. So like it's nice to have something a little bit different in your portfolio that you can kind of lean back on that doesn't operate the same as everything else. So I love AutoZone. Another one kind of like that is Chipotle, but it often does the same as tech.
Yeah.
So those are
I
some
like
of
Home
my
Depot.
everything tech, of course, I love, but those have been some that I actually really, really like that no one talks about as much.
Okay. So speaking of which, since we talked about like tech going on like this, tech being up, of course.
Mhm.
So what are your thoughts about 2020 and this run that we've had since March? And now here we sit in, what is it, mid-September? So what are your thoughts of how, like where we've come from? And then what are your thoughts about where we're going
Can I,
when it comes to the tech play, as well as what you think, you know, economics wise?
am I able to share my screen?
Yes, you can.
Okay. So When I think about trading in general, I'm very much a technical analysis trader and I look at charts. So for me, um, like this was just a huge drop. And then we had this like come up. And then people were wondering, well, what happened? Like, why did we drop again? Well, we passed an all-time high. It kept running, but then it's a technical drop. It just, that's what it's going to do. So now where are we going from here? Let me stop sharing. Um, I think that tech is naturally going to do well in this season. As long as you have companies that are still going to have to social distance, this is a personal thought, I do think we're still going to have flare ups of coronavirus. I do think that even with school going back in season, someone's going to go home, take it to their family, and then it'll blow back up. So we will have to have some times where we won't go back to normal right away. And I think in those times, tech just blooms. Of course it's going to do well. So all of those companies, I don't think that it's a fluke that those are the ones that were successful during this time. And I think they're still going to be successful. Even with the recent drop, I think tech is still going to do well.
Nice.
Um, Now, in terms of the overall market, what will we do? I'm actually a little concerned about the deficit right now. I think that's not sustainable, and I think that if right now we're relying on states to fund economies, they don't have any money left.
Ain't
So
got
that's
that,
going to
ain't
be a
got that paper.
right? That's going to be a problem. And then I also think that a big part of the market is commercial real estate. And if we're not going back to work and people start defaulting on loans, that's going to be a problem. So I do see that there will be some issues in our overall economy that eventually will start showing up in the market. But will tech survive? Yes, they're some of the best companies, they'll survive.
Yeah,
Do you
one
feel
of the
like
things that we
oh, that's
noticed
smart.
though, one of the things that we noticed was that a lot of tech companies, I think it was like there was a report 3 months ago where tech companies they were dropping out of their commercial leases. They
And
were
that's
getting out of their commercial leases so that we're like, well, hey, we're tech companies. You could be working for the company anywhere. So why are we paying this commercial lease? And it's kind of funny for me that I saw Simon Properties go up on a huge spike. I think around the time that Amazon was talking about purchasing some of the JCPenney and Sears locations or something.
I mean, that makes sense because at least they won't lose all their money because Amazon will come in and kind of save them. But at the same time, during the housing crash, one of the reasons why we crashed is because people couldn't pay their mortgages.
Mortgage.
So now, if you have commercial companies not able to pay their mortgages, I mean, we're going to be in a similar situation. This time, at least we'll be more liquid because the Fed is helping out. But I mean, you can't sustain that for a long time.
Yeah.
I have a question for you, Terry. When do you see tech as a so-called hedge?
Hmm. I mean, I'm the wrong person to ask because tech is my thing, so it's not my head.
I was gonna say, yeah, that's when
Like, I don't necessarily like if you're using tech as a hedge, that means that you're invested in something else, like utilities or something, or maybe you were in airlines, and so you're in tech to help your portfolio. But for me, I'm not in any of those because I don't think they're healthy companies. I'm going to be going for the ones that are more healthy, and I would just let those go.
Yeah, so I'm bringing that up because I'm seeing when we had like this correction, there was money that rotated out of tech and then rotated back into some like value stocks. So I was just wondering, how that rotation, as far as being not you in particular, but just in general, like value investors look at those things. Like, do you think they look at stock as tech as a sort of hedge when the market is or the economy is not as healthy?
I'm sure that they do, especially if you're a longer term investor and you have to reposition or like redo your portfolio. You're going to look for more momentum and you'll look for things that work. So of course, or even the hedge funds have to always be fully invested. Investors like myself and Mark and us, like we can take our money out and sit in cash if we want to, but they still have to find something to work.
you
So
gotta
of
find that
course,
performance.
right. So when it gets to those, like in the chart where you saw that it went back up to all-time highs, that's where they start selling because they're taking profit.
Yep.
And then they gotta put that money somewhere else because they have to be fully invested. Us, on the other hand, we would sell, take a little bit of profit, and just hold that in cash till it fell back down a little bit, right? So, I mean, those are my thoughts on it. But I can't always speak to things that I don't do.
Feel you.
100%.
We have a lot of love for you in the comments.
Yes.
Just letting
It's
you know.
kind of cool where we have the Trade and Travel family meeting, the Come Up Series family.
Hey, y'all.
Hey, friends.
Right. Okay,
You guys say that you're cousins. We also say that we're cousins. We're trading cousins.
Okay.
So family, this is a big family reunion.
Somebody fix me a plate.
Yeah.
For the record, I'm looking at, first of all, these comments are hilarious. You all, I've been trying to keep a straight face, but sometimes it is hard. I do want to say that I'm only wearing black because that's what I felt like wearing. There's no goon hands coming out today. I mean, at least not right now. So I know that black usually signifies that, but today I just felt like wearing black. So let's calm down, y'all. But I do reserve the right to bring it out if need be. We got moderators in the chat too, FYI. So
I'm looking now. I'm like, what y'all saying in the chat? I hope y'all know.
It's lit.
It's going too fast for me.
Oh, hold up. Breaking news.
What
We
happened?
just hit a record for live chat viewers, 2.7. Our last one was 2.6. So, yes.
Let's get
Y'all are
it.
showing out, family. Okay.
Let's go.
Oh, wait, and we got to do a shout out too. Shout out to EYL. They just had their 100th episode today. Congratulations.
Congratulations, y'all.
Awesome.
That is huge. I mean, 100 episodes.
Yeah, that's some longevity.
Consistency. Yeah, that's like mission and consistency together. Like that's the same thing you need to be a good trader. You got to have consistency and determination and mission. But I'm just, man, I just really hats off to them. They're doing their thing. That's awesome.
We assist the UIL.
Yes.
Mm-hmm.
Wait, let me
get my cup. Mm-hmm.
What's in that cup, girl?
That's the cup.
I know y'all stay hydrated. It's water. It's water.
Hilarious. So, okay, we titled this appropriately because there were some things that, I told you about. We came, we saw, and we rolled. This whole episode, honestly, was, well, at least the title was really inspired by Monday, what happened Monday. As you all know, September 14th was the day that y'all were waiting for some of the chains to extend. And I want to shout out a couple of the cousins. Let me shout out Cousin Tivo, Cousin AJ, and Cousin Teo, because they took it upon themselves to host a study session where 500 cousins attended, asked questions, and learned. And I just want to shout you all out because I'm seeing that you all are of service, and to be a good leader, you got to be of service. So I just really want to shout you out. And Mark, I'm going to shout you out too for that surprise study session that you did not have to do, but bless your heart, you did.
Well, since I couldn't give you guys a 60-second come up,
Yeah, y'all got like about 49 minutes. So
there it is.
Balance, right? So I just want to just shout that out. So we came, AKA we studied, we put in the work, did those strike price formulas till midnight. I remember receiving a lot of screenshots, chicken scratch. Okay, moving on. Now, for the part of this called We Saw, let's rewind back to Monday, because we had some surprises, Teri, and this is all like, options. We had some surprises. Mm-hmm. We were all surprised to see that the chain only extended to $130 strike price for XYL, or excuse me, XLK, my bad, excuse me. And that contract premium was like $1,600 for one contract. And there were some other things that we saw. And so, Mark, what did you see on Monday? We were in this office together.
We were in this office. So I saw a lot of buying that I couldn't take part in until 8:30, 9 o'clock, because I was a man of my word. And I said that I wouldn't flood the market until after everybody had their head start. So that was the first thing that we saw. But the other thing that was very interesting is, and Teri, let me know if you've seen this before. Mm-hmm. we saw the options market open up to 2.5-year contracts.
Really?
Yes.
Yes.
Huh. Okay.
So for example, we're in September right now, and the XLK contract opened up to January 2023. Now, many folks were expecting, see, I see the minds. Y'all, if her eyes drift away.
What? Okay.
So the January 2023, a lot of folks were expecting the June calls to come out, the September calls to come out for 2022, which I think we will start to see those sooner or later. But the interesting thing was, and I've been trying to do some due diligence to check and see if this was like a mistake or anything like that. But everybody's kind of like saying no. We were kind of like surprised as well. The January 2023s came out, and when we say that January 2023s came out, they showed out. So it was like ARC, which normally has contracts open up to 6 months. ARC went to January 2022 and January 2023, though it's only the KK version, not the KW or the KG, so on, so on, so on. But I mean, still, in rare form, we saw ARC open up to 2.5-year contracts. I mean, XLY, SMH, I think FDN went to January 2023 as well. So
this right here, like this jumped from 2022 down to 2023. No in between.
Yeah.
Wow. Okay. For all the people who are wondering, like I feel like I'm the interpreter sometimes when people are like, wait, I don't understand. This visually is what we're saying. Like instead of like usually it'll go, you see how like October has each week, dun dun dun, and then it goes to 2020, then 2021. It's kind of like close together, but this just jumps a year.
Yeah.
Okay. Go ahead.
Yeah, so we were expecting, if we hold that up if we keep that on the screen. So yeah, let's bring that back up on the screen. By the way, you should let folks know that she's using Option Station Pro, I think. Yes.
Yes.
So one of the cool things about that is that we were expecting from the January 2022 calls, it was supposed to be June 2022 and then September 2022. And then CBOE just said, you know what? Allow us to reintroduce ourselves. And then
you decide whatever you want to do.
23s. Now, a lot of folks were sitting back and saying, well, do I stick to the script and go with the January 2022 still, or do I go with the January 2023s? And that was quite the dilemma. So I guess what we can say for folks is, here's the cool part about it. And I guess if Yahoo isn't trying to act up, here's the reason why this is going to be super duper interesting, AKA super duper dope. All right, so is Yahoo tripping? We shall find out, y'all. We shall find out. All right, they're actually being nice to us today. So let me go ahead and set this up here.
We got another breaking news announcement.
Oh, go for it while you're
2.9. 2.9.
That's what's up. Show out, y'all.
Let's do it.
Let's do the 3. Let's go.
We're gonna break all the records. I want to be the one on the come up that's like our episode that had the most views.
Yeah, talk your stuff. Talk your stuff.
Teri, you better talk your stuff, girl.
Right.
All right, so here we go.
3,000.
We just hit 3,000?
Yep.
Y'all keep sharing it. Keep sharing. I wanted to get to 5,000 today. Y'all share it with everybody y'all know. Tell the world.
This is like tell a friend, tell a cousin, tell a auntie, tell an uncle.
Put it your Instagram.
That friend that you don't like, or that person that you don't like.
Tell them all.
All right, so check this out. So here's the interesting part, and we're gonna like bring this a lot closer, shall we? Because Teri, we like charts here.
Definitely.
So here's the cool part. We were down all the way to 112. Now, the options market opened up for XLK January 2023 at 130. Now, we're going to let that sink in for a second. Now, for those that were just trying to I'm going to lay out some clues for folks. Just let's lay out some breadcrumbs. Let's look at a 3-month, a quarter's worth of charts. So as you can see, we had a very, very, very healthy run up all the way to September, the first week of September. Then we dropped
too. Very, very, very
heavy, heavy amounts of buying. All right, so then we dropped and then we came back up. Now, notice something here is that we also came back and bottomed out again. Now, if we come all the way back here, this is around the same time that when we look to the August, the first week of August, that was like the week before we were preparing ourselves to do another run. Now, if we look at it in the where we see the bottom, now, had we broken past this, then I mean, we probably would have dropped down probably 15 to 20% in the market. And this is of course ETF. So take this into consideration. When most of your tech companies correct about 10%, your ETFs are going to correct about, what is it? I think it's 7 to 8.5%, respectively. They never really correct all the way down to 10% when you see the rest of the market down 10%. Just a little FYI. All right, so we saw that we hit this August 3rd level, and we kind of like just treaded within this range. I mean, typically when you're trading within a range trying to find a level of support, you're typically trading within a range. So you may have some ups and you may have some downs. Now, here's the interesting thing. We ended today at that same level of where we were at the 9th of September. So this is going to be, tomorrow is going to be definitely a very huge day for the market to help us understand, did we reestablish positioning, or is there still some short-term pain for us to come back down to some of these levels? Now, I won't make any guesses here, but what I will tell you though is typically when you see a correction, you see the market correct, and it doesn't really happen this fast. This is one of the things that we're seeing that's quite unprecedented. You're seeing the market correct significantly fast. So if we look at the full year-to-date chart, this doesn't really happen that fast. And then when we look at the recovery, it doesn't really happen that fast either. When you really look at a correction typically takes place anywhere from, I like to say, 14 days all the way out to sometimes 45 days when you look at an extended period of time. And over that period of time, it's not dropping just astronomically, it's dropping precipitously over time. And so now here we see ourselves in this 3 months, we dropped significantly. These are days, y'all. Like, these are a series of days. So now here we sit. Over the last 2 days, we had a nice little rally back up to a specific point. So typically around this time, you'll start hearing on CNBC, you'll start hearing people talk about retests. We're going to retest some of those lows. There's still some room for us to drop and to find some technical analysis. Now, I'm going to do something which is in rare form and fashion. I'm actually going to throw up a lob to my dear friend Teri to talk to us a little bit about the technical analysis when we talk about, say, for example, a retest from a correction. Teri?
Sure. So where Mark was just showing, Mark, can you show him that little, like, the price comes up, stops going up, and then goes back down, or inside the W, the middle? Yeah. Yep. So right here, what we would say is that this is where banks are starting to sell. And the only reason we know that is because as price comes up, it stops going up and then comes back down. The only thing that can push the chart like that is selling, and big orders of selling, not just me and you like retail investors, but big bank orders. That's the people who are actually moving that chart and moving the market. So what's happening now is as we come back to this area where banks were selling, we have to find out, are the banks, do they still have any open orders there? So when they put in that million share order to sell XLK, are there still some orders that were sitting there that have to be sold? If they do, then those will execute and the market will come back down. But if they're out of orders to sell, the price can still keep going higher. So like that's what we're thinking about when we're thinking about technical analysis here, the buyers and the sellers. And right now it looks like we'll have to find out tomorrow, are there any more orders to sell or can we push higher? That's what's happening.
And
that is a perfect tag team.
Yes. High five. Virtual high five.
Teri, there's some questions. Oh wow. Okay, hold on. Yo, the chats are going crazy. Okay, they're good. They're saying really great things about you, Teri. Especially you being an excellent teacher. So,
Aw, thanks, guys. Thanks.
so
That's
another.
oh, sorry. Go ahead.
No, go ahead, Teri. Go ahead.
Well, I was just gonna say that's a blessing. Quick deviation, but sometimes you don't know how your gifts will show up later. And I definitely feel like me going in that education route, like I didn't know what was going on. Like I felt like I was being suffocated because I felt like I could do more, but I was in this season. But now that I'm starting to teach people how to trade, I can clearly see that God was gifting me and training me up during that season to do what we're doing now. So thank you guys for recognizing that. That's definitely
So some of the other things that we saw on Monday was emotions. A whole bunch of emotions. And, you know, Teri, last week we had a chat during pre-production conversations. We talked about, you know, the emotions in trading. So I would love for you to share what we were talking about.
yeah. Well, so there's a couple things that I want to talk to you guys about with just mental health and trading.
Let's do it.
Trading is trading is one place where every time you take a trade, you're going to be 50% right or wrong. And I mean, like, it's not so much I'm not talking about your trading average or your scores or percentage. I'm just saying every time you take a trade, you're either going to make money or lose money.
Mhm.
Like, and that can be the most emotional job in the world. If every time you went to work, somebody either was going to tell you you were right or wrong, like it could really, really mess with your emotions. So you got to come in with like the full armor. I'm like the full armor of God almost, but you got to come in like ready for this game. It's not something that's easy. And I had somebody in my DMs and they reached out to me and they were like, Teri, you know, if you could just help me, you know, I'm going through all these things. My child is doing this. I don't have much money. I'm unemployed, but I want to learn how to trade. One thing I just wanted to say here, and then I'll let you guys talk, is sometimes, guys, if you are emotionally in a down place, that might not be the right timing to start investing because this is an additional emotional roller coaster and you got to know yourself. Like trading money is going to add to any depression or any like mental health things that you're going through. It's going to enhance it. So you got to be ready for something like this. So that's what I was talking to Jolene about, and we can talk about it. But I do think there's something to say about emotions and mental health with traders.
By all means, go for it. Go for
One
it.
of the things, Teri, well, so what was interesting is somebody had reached out to me maybe about a couple of weeks ago. And I personally do not give one-on-ones. And it's really right now, it's really just a capacity thing, but I will maybe next month, we'll see. But she was asking to, you know, she's like, well, can I just, you know, pay for an hour of your time? And I was like, sis, I just calculated my current value for this week. You know, so I don't think that's gonna work. I was like, I can't do that to you, you know.
Wait, pause. When you say you just calculated your current value, so you calculated the value of your
I'll leave
time?
the room on this.
Yeah, every week.
That. Oh my gosh, I'm gonna do that tomorrow, and then my course is gonna go up by $1 million because the value of your time is serious.
Should we do it? Should we do it today?
Let's throw that in there. Let's throw that in there.
Okay. So go ahead.
Wait,
Joe.
but first let me just finish this. So the girl, bless her heart, she thought that she was calling me because she needed some advice about trading. And what turned out was that she really just needed some advice about emotions, like managing emotions. And we kind of talked about just the training, or excuse me, trading journey and like that mental fortitude. And one of the things that we talked about was, especially if you know, you got to know yourself. And if you know, just in regular life, you're emotional, I feel like trading and investing will exacerbate that. It'll just amplify it, and you'll be 10 times more emotional because, like you said, it can feel like a lot is on the line. And so we were talking about like you can be emotional all day and all night, but really you got to you got to write it down. You got to get it out of your body, get it out of your system. And we talked about like the importance of, you know, just keeping a journal, just writing that stuff out, processing it, you know, have somebody you could talk to many times, many a time in my trading life. You know, I had to call Mark, bawling my eyes out. And it could be something happy. It could be like, I think I made a mistake. It could have been anything.
Yeah.
So Mark, shout out to you for doing that, because honestly, the conversation would be, in every conversation is like laughing and crying. When I was first trading, like within one conversation, 1 minute I'm laughing, then I'm crying, you know, back and forth, because this is emotional. I'm an emotional person. And so anyway, like the importance of writing that out, just getting it out of your system. I can't stress that enough. Sometimes you gotta take other parts of your life, however you cope, however you navigate, and set that up as your way to manage your emotions. So if one of my good friends just told me that there's some room, like a destruction room or something in Seattle and Tacoma, part of, you know, where we live.
Yeah.
And you can just go in there and just start smashing stuff. She said that she beat the mess out of a DVD player. I was like, okay. So I was like,
it's actually quite therapeutic, you know.
Yeah,
it's actually quite therapeutic.
That's like one extreme.
I didn't want to gossip, but you ain't heard it from me, but I hear it's very therapeutic.
Before you start beating up stuff in your house, which might be a person in your house, please also consider getting some steps though. Like I will say, like that is one of the reasons why it's important to have a trading plan. And like Mark, I know that you talked about that before in the past too.
Yep.
Like one of the reasons why trading plans are so important, and like I teach my students, like we have a 7-step trading plan in Trade and Travel, because if you follow the steps every time, it'll take some of that emotion out. At least you know that you'll be disciplined and you'll be able to have like your risk management already planned in there. Okay, I know that I'm not going to go past my risk tolerance. You'll have your exit already planned in there. You'll have your entry plan. So like that's why the trading plan is so important, because it'll help you manage those emotions. And if you don't have one,
Yeah, we still hear you. You're good.
Oh, you still hear me? Okay, I'm like, I can't see. I think Trade Station just was like, let's trade. Okay. But, right. It's like, I heard you say trading plan. You ready? But if you are feeling like you're in a really emotional place, like one suggestion is like, of course, my suggestion is going to be, I think you should take a course, but definitely get down a trading plan so that you can have some steps outlined, and that'll give you more consistency and take some of the emotion out. But go ahead, Mark. I think you were going to say.
So before I get to that, like, let's talk about your course, because you offer a course.
Mm-hmm.
So tell the world about your course.
I think the link is in the bio too. Did y'all put it in there?
Oh, it will be. It definitely will be. For those of you that definitely want to come back and replay this, especially for the gems that we will drop in this video like we always do, there will be a link in the description, so that way you can go check it out and learn more about Teri.
Breaking news, 3.1.
Keep coming up. Keep coming up.
I had to learn how to.
Oh, she over here nay-naying. Okay, there it is. But here's the cool part. Like Jolene had mentioned something, and you've heard us talk about this value of your time per hour. And I think if you ever go back and watch the video that we talk about value, but here's how you can kind of start looking at it when we think about it on a weekly basis. Thanks, Jolene. What I want you to do moving forward is calculate your profit for example, if you're in a month-long trade, or if you're in a 2.5-year trade, whatever it is, what I want you to do is calculate each day that you've had profit and that you've had loss each day. So from Monday through Friday, what was your profit and what was your loss? You're going to add it up on Friday, and then you just divide it by 40. Because when you think about it, especially if you would like to walk away from your job and for it to become this more so the gateway for you to walk away, think about it like this. There's 168 hours in 7 days. 40 of those hours you'll probably spend working a 9 to 5 or whatever it is. Another 40 of those hours, or roughly 40 hours, because the average person doesn't really even sleep 8 hours a day. But when you add it up, 40 hours for the entire week. So that's 80 hours already gone. Another 20 of those hours you'll probably spend just doing whatever. So then there's 100 hours gone. That still leaves 68 hours left. The question is, what is it that you're doing with it? That's the first thing. But when we come back to the weekly profit and how is it that you calculate the value of your time, you take the profit, the overall profit, or the overall just average of whatever it is that you made for that week. You divide that by 40, it'll spit out a number. That is the value of your time per hour for that week.
I
And
love
then
that.
when you start adding it up on a weekly basis into a month, then you take into consideration how many hours you typically work at a normal job for a month. You divide that by the overall profit in which that you made. And then when you look at it over a 3-quarter period, you can do the same thing. 6 months, 9 months, 1 year. You take that into consideration when you think about the value of your time per hour. You know, word on the street, I heard that somebody actually has about $82,000 worth of value per time or per hour. But you know what? I'm just moving on.
Drink your water, Mark. Just go drink your water. No.
Take your shady sips. But you know what's really awesome about calculating your worth or your value, especially on a weekly basis? One, man, when I started doing that, all of a sudden, you couldn't tell me nothing. Okay, I was like, "Ooh, I need to raise my prices because y'all don't know about this time value right here," and it builds your own confidence.
Mm-hmm.
You know, put a little pep in your step, and it's actually a really good exercise just to constantly be aware, like how your research. You know, Mark always says, the more you learn, the more you earn. Right. So how your research shows up in your weekly profits. And you know, if you really want to stunt, you can do your research, and then where are the other areas in your life where you are generating money, or where someone has told you your value.
Yeah.
And you can choose to agree, but you got to know your own value first. If you don't know your own value, then you will be subject to what somebody places on you. So you got to do that, y'all.
A wise person that go ahead.
Go ahead.
Go ahead.
I was gonna say, I have so many thoughts on this right now.
Go ahead. Like, we free flowing.
I always get these comments in my, and y'all ask me about my course too, but I always get these comments about, like, why would you pay for something that you could find for free online? But it's exactly this time value that you guys are talking about. Because do you want to spend, there's so many ways to flip this. It's one, how much time do you want to spend trying to learn when you could spend just a short amount of time learning in someone's course that's already been through all the mistakes? Like, what is your time worth in that sense? Then in terms of, like, how long will it take you to actually become successful? If you were to just try to figure it out on your own, like, we've been trading a long time. I've been trading 10 years to get to where I am. I could but you take the course, like I told you, I'll tell you about the course, but you take someone's course, you learn their mistakes. Now that just shortened the amount of time it takes for you to start getting the results. So when you think about this, like, time value, there's so many reasons why this is important and why, like, it benefits you to learn from people who've already been through this. Like, to me, that's one of my biggest pet peeves when someone says, like, oh, you could learn this for free. Yeah, music is free too, but people still pay for concerts because it's about the experience. Like, some things are just better live, like they're better in person, right? So anyway.
By the way, I'd love to go see her live, or Stevie Wonder live.
I bet their voices are so nice.
I don't hang around people that be asking questions like that. I just can't. But you know what? This is a good shortcut. This is what we say, like, in the art world. It's not about the how, but it's about the who. So it's like you're literally switching up those letters. It's not about the how, it's about the who. Who is going to make this thing happen faster for me, or more efficient, or help me to understand it better? Because you can just Google to your heart's desire and just, how do I do this? How to? And it's like, no, it's who. We're relational people anyway. So, if you don't know, there is somebody that knows the answer to your question. So, yeah.
Well, okay, let me tell y'all about the course before people in the chat be like, Teri, you didn't talk about it. So it's a 8-week course, and we do cover stocks and options in the course. In the first part of the course, we talk about how to make money on the way up. So that's what I'm teaching you, how to pick good companies, how to protect your risk, and then how to read charts, which Mark and I both are big on charts, how to read charts, and then how to have a trading plan. So I teach you that 7-step strategy that I take every time I take a trade. Then in the second 4 weeks, which we call VIP, that's when you start learning the more advanced things, like how to make money when the market goes down. Then we start thinking about short selling, gaps and Globex trading, and then we go into options. So gaps and Globex is like when there was those big jumps in the chart because of news. How do you trade that? Or from Globex overnight, how do you trade that? And then of course options, like y'all are learning from Mark, but sometimes it like one of my students, and shout out to Annette, she's on here. I saw her from the Trade and Travel family, but I saw her and she said, I'm so happy that I learned the foundations from Teri so that I can understand what Mark says on the come up, right? So sometimes it's just nice to have all the foundations in place and learn about options. Okay, what is a put? What is a call? How do you buy them? What does that look like? Learn all that. And then when Mark comes in with the 2023 came out and the bewitching, I don't even know if I'm saying that right. I don't know the word. Bewitching, double witching. You'll get it because you already have the foundations. So it's called Trade and Travel. We have 3,000 students in the course, would love to teach you. But yeah, that's what I teach.
Oh.
Yeah.
Mark, let me, before you go into this current value, because I definitely want to get to that. I do want to put it on the record. There are 3 other things too that we also need to cover. And so I just want to check in on time. Everyone good on time? Okay. So let me just say, I'm going to say what they are, and then that way you all know what to expect. So we're going to go over current value. And then there was a question about the number of contracts versus amount invested. And then another question, how to analyze your profits once you exceed the strike price. And then I like to close this out, Mark, with some of my favorite kind of math, the only kind of math that I really be doing, y'all, chart math. So there's going to be some skills. So y'all that are here to the end, y'all are about to get it.
Please ready.
I'm just saying, where should we start?
Let's start with current value.
Okay. So should we talk about, when we talk about current value, I need a cue because we've talked about a lot. So just need.
What? I think we covered enough of current value.
Okay.
Because if we need to talk about it again, we'll talk about it on Thursday. Yeah, unless there was something else you wanted to add. I mean, you went through how to do it and everything.
No, I can wait till Thursday.
Yeah, I was gonna say, it sounds like you all study group did a lot of calculating this weekend too. Did you?
They did. They did.
Oh, can I say something though? So a lot of folks were upset with me because of the fact that they used my strike price method in picking how to pick my strike price, especially for long-term trades. And some folks were quite upset with me. So let's set the record straight here.
Uh-oh. Got a goon hand? What is that?
No goon hand, but sometimes, I'm a peaceful person, I'm a happy person. I'm going to typically say a happy person. Now, Sunday, that was a little different because, you were knocking on the door of John Wick. But, today, Mark Monroe. But, so here's the thing. The market gave you a gift. And a lot of folks haven't realized that yet, but let's explain why. The market gave you a gift when we talk about options trades that just hit the market. Let's just do some quick analysis, shall we? Don't need a chart, but if you liked me to, I can show a chart. Not that hard. But
go ahead.
If we talk about, let's say a lot of folks were really focused towards the technology sector, Spider ETF, XLK. Now, if you went by my chart and calculations, that really puts you at the 140/150 strike price for XLK for January 2023. Now, unfortunately, it gave you a 130 call strike price for January 2023. But if you really put it into perspective, we went from 112 and then the strike price is now 130. Now, let's do some facts here. The 52-week high was 127.72. Do you see where we're getting at here? We're pretty much between the realm of 15 to roughly 20% over the next 2.5 years.
A lot of time.
That's, and then some of you like to talk about Greeks.
Uh-oh.
Let's talk about Delta. The Delta, I think, on opening day of the January 2023 call. And so for those that don't understand Delta, it explains two things. It tells you the price movement. And then on top of that, it also gives you a slight probability, or it tells you the probability of the opportunity that you're doing the trade in which that it will show up in the money before it expires.
Mhm.
It opened up at 51 for a 2.5-year trade. Now, the only other great trade that I saw like that was the NVIDIA 2022 September, which was, I think it was like the 520. And that was because of the fact that it was pretty much there at the money for NVIDIA at the time. And that the delta on that was 60. So let's put that into perspective, shall we? You have a delta on opening day at 51. You have a strike price that's the highest point at 130. Now, for those of you that were in the January 2022 calls for XLK 135, still a good trade. 140 trade, still a good trade. But I mean, January, like they give you a whole extra year.
So, okay, so wait, a couple just explanations on that.
Go
So
for it.
the delta thing. So when Mark says that the delta was 0.1 or 0.51, that means for every dollar that the stock price moved, your premium was moving 51 cents. So that's actually really good for so much time in the future. Like for every dollar, it's still moving 51 cents. Like that's nice. And then the probability that that strike price will be in the money, like remember he says the delta tells you two things. So that means there's 51% chance that that strike price will be in the money at expiration, and you're not even going to keep it till expiration. But that's what he's talking about when he says the delta is at 0.51. Like you're actually getting 51 cents for every dollar that the stock price moves on that premium. So that means $51 per contract.
So
Okay.
let's think. Let's do some more thinking, shall we?
Mm-hmm.
The average ETF grows annually anywhere from 15 to 25% year over year. I think I said too much. I'm gonna just leave it there. I'm gonna just leave it there.
With you.
I'm gonna just leave it there because I don't want to give up I don't want to give up certain things because I want somebody to my left to be talking about guidelines, more guidelines. But what Teri just said, what I just said, and then on top of that, take into perspective that your average ETF moves 15 to 25% year over year. And then when we look at, if you ask yourself over the next year, what's going to be the best investment over the next 52 weeks?
Tech.
Yeah.
So for those that were upset about, like, say, for example, a strike price. So for example, if you bought the strike price at 17, now this is where it comes into play of looking at where your strike or where your bid could be. Because most of my trades, I typically look at anywhere on average is a 1 to 20 risk reward ratio. That means for every, let's say for every dollar, you expect a $20 return, just in simplicity. If you're talking about thousands, it's for every $1,000 invested, then you expect 20,000 in return. That's on average when I look at a 2-year trade. When you really put it into perspective, when your strike prices are good, when essentially you've been spot on, then it's okay. It's like you can get there. Now, your average traders typically look at 1 to 3 is their risk reward ratio. Now, if you're decent, then you're pretty much looking at a 1 1 to 4, 1 to 5. And we're talking about like, you know, your typical day trading. Now, I'm probably guessing if you're going through Teri's knowledge camp, Teri's School for Exemplary and Gifted Kids, and then you're probably also looking at a 1 to 10, 1 to 15 return as it pertains to risk reward ratio. So really, when you put it into perspective, it's like you really couldn't lose. Now, what a lot of folks were getting really caught up on was about the price in which that they were paying, which was in the premium meaning the asking price in which that they paid. Now, a lot of folks were expecting that, hey, I'm going to pay $1, or say, for example, I'm going to pay no more than $3 per contract, and I'm going to just go heavy in contracts. Here's the secret. When you're literally playing an options trade, if you have $5,000, let's just bring it down to $1,000. If you have $1,000 to invest in a trade, now of course the XOK trade probably wasn't going to be for you that day, but if you just waited till today, then you saw more prices hit up on the chain and there was opportunity. So I think somebody, you know, wise that I know said, get in where you fit in. So then here's where we go even further into perspective. If I'm investing $5,000 into a trade, hypothetically, and I'm trying to get contracts, but I can't get the amount of contract volume that I want to, when you really put it into perspective, $5,000 is still 5,000. Like, let me ask you this. If you've invested 5,000 in Apple, or if you invested 5,000 into XOK, and if you received 100% return in Apple, and if you received 100% return in XOK, is there a difference?
Wait. Say that again. Repeat it.
If you invested, or if you traded in an options trade with $5,000 in Apple and received a 100% return, and if you traded 5,000 into an XOK and received a 100% return, is there a difference between the two trades? When we talk about the money.
No. Well, depending on, okay, let me know if I'm thinking about this correct, because I want to make sure that other people, if they confused too, they not confused. So like XOK right now is at 116 and Apple is at about 116. So are you saying if they both move the same and got 100% return, would the money be the same?
No, I'm saying if you did an options trade and say, for example, you receive 100% return in an options trade with your 5K in Apple and a 100% return in your options trade with the same 5K in XOK, is there a difference?
Okay.
The answer is no. 100% is still 100% of 5,000, so which turns into 10K. So you can go contract heavy. Now, in certain cases, being contract heavy increases, say, for example, sometimes it can also include a multiplier for the amount of, say, for example, velocity of how a trade can come back. But in reality and perspective, the money is still the same. And that's where you got to get it into perspective. What your initial investment is, that's what it is. And that's ultimately how it's moving.
Yeah.
So and Mark, you just answered it. One of the questions, was the number of contracts versus amount invested. And so you definitely talked about the amount invested, just, period, whatever your dollar amount is. But with the number of contracts, if you could talk about like that multiplier, because that's what people were wanting to know, especially those that are starting out with just one contract and, aspiring to have multiple contracts.
Yeah. So like, for example, like, and I think I talked about this earlier in our production meeting where like we heard that some folks were, a little bit, nervous about investing 10K. Now I'll give you the tale of two traders. Now, one says, okay, hey, I want to go very heavy into, let's say, ARK, and I want to get as many contracts as possible. Now, the other trader says, you know what, I'm going to just take 10K and then just invest it in Tesla. So, I mean, if you're investing in ARK, then you're investing in Tesla because Tesla is the largest number in the ETF. So really, you're investing for Tesla. So let's say that you get a Tesla contract you only get one contract in Tesla, and you bought it at $82.50. And then let's say on the other side, you invested in an ARK and you got 10 contracts. Now, let's say that that Tesla trade goes all well. We'll start with ARC trade. Let's say that the ARC trade does well just as much as Tesla does well, and the ARC trade goes for, you got it for, let's say that you got it for $5 a contract. So in reality, you got it for $500 a contract.
Mhm.
So
You spent 5,000.
yeah. So you got 10 contracts here, you got one contract here. Well, actually, you got 20 contracts here, and then you got one contract in, let's say, Tesla, if it's 10,000, if we're looking at 10,000 evenly. Okay, so you did the ARC, and the ARC grows to, let's say, 5. It goes by 5. So it goes from $5 a contract all the way up to $10 a contract. That's a very good trade. I mean, that's a solid trade. So then what you do is you take that 5, that same 500, and then multiply that times the 20, and then there you go. There's your profit outside of the principal in which that you put down. Now, let's say that the other person who's doing the Tesla trade. Now, I'm not saying that you should just turn around and just do this tomorrow. I mean, I'm just using this just for straight up educational purposes and understanding how, say, for example, an option works. For in some ways, it'll work in the advantage of the person who buys that one contract versus in other ways. So let's say that the other person chose to do that one contract in Tesla, and that Tesla trade goes from $82.50 a contract to $550 a contract. Now remember, they only have one contract. You know, it's okay. Well, you know, I'll
No.
pull out my Apple iPhone and do the math with you.
Well, and like one quick thing that you guys should know is for every penny that your premium moves, you'll make the number of contracts you have in dollars. So for your Tesla contract, for every penny that premium moves, you made $1 because you had one of them.
Mhm.
On the ARC one, for every penny that one moved, you made $20 because you had 20 of them.
Mhm.
But you got to think about the fact that the ARC one, it went from $5. It just made $5. So that's 500 pennies. Is that correct? Am I doing the right math
Yep.
right?
500
pennies times your 20.
Mhm.
But how many pennies did that 82 to 500 go?
That's a
In
whole
terms
lot of
of what I
pennies.
want, right? So like that sometimes helps when I'm thinking about how much money I'm gonna make. For every penny that this premium moves, I make $1 per contract.
Now, for the record, for the person who would have done that contract of, let's say, that one Tesla with the $8,250 down, that would have netted that person 55,000. Well, I mean, minus the 8,250, so a little bit less than 55.
Mhm.
But I mean, you see how that works in the sense of it's not always about the amount of contracts that you buy, but it depends upon exactly what you want your returns to be also. So for example, if you have invested into, let's say, a XOK January 2023, or you did an ARC 2023 or anything else like that. Remember when we talked about, I think we talked about this a little while back where we talked about the rolling fours. I think we could have done that. And where you're setting goals, especially for long-term trades, you're setting a 5 time, 7.5 time, and a 10 time. Now, if you go beyond the 5, then that's essentially okay. You set your marker for your stop loss just in case for any downside. You're protected. It automatically cashes you out. You take profit. Now you have what is called, and somebody likes to talk about them a lot on the show, called stretch goals.
That's my jam.
And you keep designing stretch goals, but at the same token, you keep also adjusting your safety net in which that is going to catch you just in case you fall.
Mhm.
And just so people don't get caught up in, first of all, don't get caught up in, woe is me, I only can get one contract. You, like I say, get in where you fit in. The fact that you're in the first place, kudos to you. But also consider that the number of contracts is a metric of your liquidity. So you all know that, like this year, it was all about 3-digit contracts. And I was really proud of that because I remember when it was only 1 digit and 2 digit. Okay, so, I'm just trucking along, making my money, right? And the next goal is 4-digit contracts. And So I want you all to like think about the number of contracts. Just think of it for right now anyway as a metric of your liquidity. You know, how much can you ball out on XLK? How much could you spend on StockBay SMH? How many contracts can you get? You know,
I can explain it. Like, for example, when you first set out, I mean, Terry, correct me if I'm wrong. When you first set out as a trader, you know, when you're beginning, you're building liquidity. Every trade, every profit ultimately goes towards liquidity. Your banking, your focus is to build liquidity. Then your second, over the next, either if it's the second year or whenever the time period is, when you reach a certain, you know, when you reach certain key performance indicators, you go from liquidity, which liquidity keeps rolling if you're doing well and if your strategy is spot on. Then the next goal is leverage. And Jolene just talked about that. She started off in doing one contracts or single digit contracts or double digit contracts. And that was like a form of measurement of her liquidity at the time. And she was building liquidity. The process was build liquidity. Now, after she's done well, she started focusing on 3-digit contracts. That is a form of what we like to call leverage, because now you can be in such a position in which that you can leverage and do that. The next one, though, go ahead.
I'm sorry, go ahead. I didn't
No.
mean to interrupt you.
So then the final one, which I guess, you know, we'll save that for another day, is called scale, because I don't want to get everybody too ahead of the carriage. So
yeah, we got to build these blocks first, y'all, before we get too far. But Carrie, what were you gonna say?
Oh, I was just gonna say, like, one of the big things that my mentor told me when I was first trading is he said, people lose in options when they start going for the cheap options. Like, that's the way that you lose money, when you go for cheap options. So the ones that actually will do well and actually, you know, won't expire worthless are the ones that are actually more expensive. But we see the same thing even in stocks too, because like I'll tell my students, like, I'd rather you invest in a couple shares of Amazon than a whole bunch of shares of a penny stock, because that Amazon stock is going to move $100 a day. Like, you could literally have one and meet your goal of $100 a day, versus you trying to buy 1,000 shares of a penny stock that moves 2 cents and it's worthless. You know, it sucks. So you want ones that are a little bit more expensive, that move a bit more, and that's how you actually start building bigger wealth.
Quality over quantity. And then also, we like to call those raggedy portfolios. Don't be coming through with the raggedy portfolio, because you will get called out, y'all. I mean, just don't do it. You already know what that is. Those penny stocks, those are short-term, weeklies, whatever you're doing. You know, we're about like that long-term gain.
well, a wise person once taught me cost and worth are two totally different things.
Mm-hmm. Mm-hmm.
They're two totally different things. You know, cost, like, for example, what would it cost you? It cost me paying $1,400 for such a trade or at a premium. But then what was it worth to you? You know, let me flip it for you. What is the cost of your freedom and what is it worth to you?
Yeah. Yeah. And I will tell you too, like, the longer term options, like, you get to sleep. So I trade shorter term options, but now I gotta look at my phone all the time. I gotta be like, today, literally, my friends and I, we drove to Chick-fil-A, and I had an option that I was looking at, and I had to get out of the drive-through and walk to the front because the signal was bad. And I was like, no, y'all, really though, I'm gonna make $250,000 on this trade. I gotta walk to the front of the store. So literally, my friend and I changed seats in the drive-through. He got in this driver's seat so he could go around the drive-through, and I hopped out the car to meet him at the front because it had better Wi-Fi. Because I couldn't get a signal. But like, if you're doing a longer term trade, you don't gotta worry about all that. You can stay in the car. That's what we're trying to say. At the drive-through, you can stay in the car if you have the longer term option.
Lessons, y'all. Lessons.
Yo, I have a feeling that Terry is going to be probably looking at a 2023 tomorrow.
I'm just saying, I wrote it down in the notes. I wasn't telling y'all these Delta stats for no reason. I wrote it down. But I will say, like on that trade, I like it. Like longer term options also give you more leverage in terms of like you can still play against it. So like I had a longer term put, and then I was selling a put against it. Like you just have so much more ability, but you do have to cough up more money in the beginning. Like it's just a thing. Once you're able to save up, you can do more with higher value options. So yeah.
Breaking news. Breaking news. 3.2, y'all. 3.2.
By the way, shout outs to the Suicide Squad that's there.
Love it.
Props? Hold up, she's got props?
Oh, look at the melanin on that hand. Yes.
You know what?
Here for it. Oh,
Cute. Your dog is cute.
you're better. He's like, you got me on this screen. You know, I wasn't ready today.
Well, hearts to y'all. Shout out. Thank you. Thank you.
Oh, now he wants to get back up on screen. Go lay down. Go lay down.
It is important though to look for things that are a little bit more like higher in value. And it's not that we're saying to spend your money frivolously. It's just that a lot of times you'll get more bang for your buck when you do things that are a little bit more expensive. And it does cost because that premium you got to times it by 100. So I mean it's not cheap.
Yeah.
But I mean you'll be in a better position down the road.
What'd you say, Terry? It's not cheap, but you'll sleep.
Yes. Amen.
Bars.
Get out the car. No,
Yo, man, I can't wait. Yo, one day we're gonna hear what Terry's 16 bars is like. Yo.
We'll give you a beat and everything, sis. So, okay, we got about 8 minutes.
Okay.
Until 7:30. Let's get in some final words, final thoughts before we take this to the after party, where things get a little different than YouTube life.
Go ahead, Terry.
You
Yeah,
go
ladies
first.
first.
You go first.
Okay. When I set out on this goal, it's like every 3 months, every 3 months, I want you to look back and ask yourself, and I hope this is where you're keeping a diary or your journal. I want you to go back and ask yourself, what is it that I've learned over this course period of time? A lot of you are taking like impeccable notes right now. And it's like, the interesting thing is when you see how you can apply it. But every 3 months, there's a journey, there's a new mountain in which that you're going to be climbing. I guess I'm going to keep it very short because I want to hand it over to Terry and you, Jolene. I guess I have to ask it in the form of a question. How does the air taste and smell now?
Yo, it's fresh. It's fresh.
Yeah. It's beautiful. It just really is beautiful. Like, so recently I was able to put some money away in a trade station account and it makes 5% a month. And like I was putting like 2 million in there, and that's $100,000 a year just on the money without me even having to trade. And that is like Jolene and I talked about this the other day, like the luxury lady of luxury. Like,
Lady of leisure.
oh wait, lady of leisure, yes. Like that's when you're able to just you don't gotta do nothing. Like you know that everything I do because I want to, right? It's not because I have to anymore.
Right.
Like literally, like my money is making money for me, and I don't have to trade if I don't want to. I don't have to teach if I don't want to. I'm still going to travel because I do want to do that. But like, that is a thing, right? So it's just about like putting the time in to really become an expert so that you can have your time back, so that the air feels really nice over here. Really nice over here.
I will say that the air is cool. It's cool, and it took a minute, to adapt, to get used to it or whatever. But what is really keeping me going in all this is the fact that I know the cousins. I'm talking about trade cousins,
Trade and travel.
trade and travel cousins, and the come up cousins are gonna be up here with us.
Yes.
Yo, that family reunion though. That family reunion though, and then we're gonna be traveling too. Y'all, let's claim it right now. Put in the chat where y'all want to go. I'm trying to go back to Ghana. So let me know where y'all want to go because
I just want to know where the conference is going to be.
oh man, we haven't even talked about that.
Caicos, anywhere with a beach.
Okay.
I mean, let's go.
Y'all, like we're saying this right now in this moment, but make no mistake, this really can happen. And as you all, study, obviously tune in, subscribe if you haven't, hit the like button if you haven't. We can all get there together because this is not about a one person thing. Like, who cares if only one of us makes it? Like that's not even what we're about.
Nah.
But when we all make it and we can all be, as I like to say, not even just a lady of leisure, I know we got some fellas, but just be free to be however you want to be. That's true freedom. And then, like Teri said, you're not worried about where the money is coming from. Yo, right now, how many times today did you worry about where the money was coming from? We don't got time for that. Like, that's a bad look. So
I think I saw somebody wrote on Instagram a post.
Tell them.
Working for an hour for these people, and they're telling me I'm working an hour and they're giving me a $20 bill. That's disrespectful.
Hella disrespectful, y'all. So disrespectful. But I'm just looking forward to the time when we can all really, so I love to celebrate. And it'll be so much sweeter if we all are celebrating together and each other. So
yeah. I'm looking forward to it.
Say that again, Mark.
I said I'm looking forward to that. I mean, that's the reason why we came here, is the fact that we can celebrate each and every single one of your accomplishments. I mean, I'm excited even for you, Teri, in the sense of what's going to be over the next 12 months.
Thank you.
So
this has been like, I just love our partnership. I love that we've connected. I love that we work together because, like, I mean, trading is not something that you should do in a silo, sitting in a little nest by yourself. Like, this is
it was not fun. It was not fun.
And then the fact that we're like all trying to help, like, bring up the whole community with us, like, this is a movement. And I think whoever's part of the movement, let's go. We want all of us to be better, So I thank y'all so much for having me on. And I'm so excited to see too what the market does tomorrow, because like we talked about our little charts, like every day there's a new something. So it's just fun.
I mean, congratulations to anybody who is looking at Adobe.
Yes.
That aftermarket though,
earnings was great. They popped up like $10, right?
Futures market is still green, so
yes,
exciting.
Well, y'all, this has been real, and I have a feeling that this is going to be, you may be seeing Teri, every now and then stopping by, and you never know, you may see us, come on over there to Trade and Travel. You never know. But Teri, we thank you so much for having us on. Being a part of our show and taking time out of your schedule. We really do appreciate you and everything in which that you're doing. And on top of that, your energy is just, girl, it's fantastic. So
yo, you fit, man. We can folk. I can feel it.
God be the glory. I can't even see the glory.
Well,
y'all, I do want to say too, they will have the link to the course. I see some people asking, like, how do I get into the Trade and Travel course? There's a free webinar at itradeandtravel.com. On Instagram, I'm an investor. It looks like Imani investor, like faith investor.
That's what I thought it was at first, but then I was like,
okay. My name is Imani too. I'm like, no, it's Teri. I thought I was clever. It's just I'm an investor. But hey, whatever works. Like, let's go.
First I was like, faith investor. Okay. But then I was like, wait a minute, we're missing an I. Let me just go ahead and reread this.
But that's one of those things. You know how they say, like, this person's name was this in the Bible, and then it means this. I always thought that was kind of weird, but now like I didn't mean to do Imani Investor, but I am like a faith investor. So hey, sometimes it just works like that. That's cool.
God, won't he do it?
Right.
Well, he will.
Won't he will.
Y'all, this has been dope. But you guys know I got to get over there to the after party. So
Okay, and you know what I gotta do?
just be in the comments.
Text me, let me know. I want to come to the after party.
Teri,
No.
thank you, girls, so much. You are welcome here at any time. Anytime you want to come and just talk trade with us or talk news, talk investment, you know you're always welcome. You know, Black CNBC is still on the rise. Each and every single one of you, thank you for joining us. You didn't have to be here, but you spent the time out of your wonderful evening and you allowed us to just be a part of it. We totally thank you. Again, if you can, subscribe if you want to still check out what we're coming up with in the future, because you know next week some things are coming down the pipeline. And then on top of that, like the video if you like it. You know, I guess it helps with this whole YouTube algorithm thing, but you know, if you like it, you like it. If you don't, that's okay. Hit the dislike button, tell us why. You know, we want to get better. And I guess we'll see you in the next one. Until next time, I'm Mark Monroe.
I'm Jolene GC, and the place to be.
I'm Teri Ijeoma from Trade and Travel.
And this has been your Come Up. We love y'all. Have a good night.